Carlos Ramirez is a recently upgraded professor of economics at George Mason University, just outside of Washington, D.C. here. He joins us now here in the studio. Congratulations, by the way, on the promotion.
Thank you.
So let's get to Sophias. We talk about it a lot. It affects a lot of transactions when you have a foreign company working with a U.S. company in terms of when there's an acquisition. Explain to us the relevance and what Sophias does.
Okay, so Sophias, as far as I understand it, is a interagency committee composed of several regulatory agencies. What they do is evaluate notifications of mergers or an acquisition from a foreign entity to a domestic target company. And what they are simply looking into is to the extent to which they get into the national security issue. So they're presumably concerned about foreign companies acquiring domestic targets, and those targets are involved in critical infrastructure technology and things like that.
In the lawsuit against President Obama, specifically that site, which is in Oregon, okay, it's near the Naval Training Facility.
Right.
These decisions made by Sophias, is it appealable? Is this decision final?
Usually the way it works is they put a notification, or the two parties make a notification, and then if they think that it merits further investigation, they'll do so. The final, usually when companies, the target companies are involved, if they think that it's not going anywhere, they'll just withdraw their notification. And ultimately, it's the president who makes a decision as to whether it...
so the president has obviously a lot of say.
A lot of say.
Let's take the Smithfield deal. This is talked about today in the press, that the Chinese are basically buying pig farms in the United States and a pig processing facility. Could that be a national security issue?
Usually the industries that they're more concerned with are things like energy or advanced technology, or high-tech industries, and even critical infrastructure. So I don't know if you recall, a few years ago, a Chinese state-owned enterprise by the CNOOC, one of the largest oil companies in China, tried to acquire Unocal.
Yeah,
and
Unocal,
and then that was blocked.
So pigs might not be blocked, is what you're saying.
Right.
The federal government and the states both have taken a very different stance in terms of pursuing deals with China. The federal government has been a bit more cautious. The states, on the other hand, have been much more aggressive, inviting the Chinese over, sending delegations back and forth between Beijing and Shanghai. Why the big difference between what the states are doing and what the federal government is doing?
I think it's a bit of a difference. I mean, I should say, obviously, the federal government is also interested in getting business going and whatnot. But in a relative sense, the states have a little bit of a different incentive. They want to obviously bring in more employment, more business deals to their territories, or to their states. And on the federal government, while they are also interested in doing that, they also put a lot more emphasis on things like this national security in particular, especially since 2007, when they passed this new law that kind of gets companies that deals like this get a little bit more scrutiny.
All right, let's talk about the deals. If I'm a Chinese company, I'm looking at the U.S. for potential targets. Why look at the U.S.? I mean, what are the real benefits? Because there is a lot of hassle, there's a lot of scrutiny. People like us will talk about it, we'll say the deal is good or deal is bad. I mean, there's a lot of hassle to go through. What are the key benefits? So
the main thing, obviously, would be, there are different aspects, but most Chinese companies that are interested in investing in the U.S., or for that matter in Canada gets a lot of Chinese investment, are looking for geographical diversity, more access to different business opportunities. Sometimes in economics we call the economies of scale, just gains in efficiency by just acquiring a target company over here, and basically more opportunity, more business opportunities. I don't think that they are interested in violating any kind of national security problems or anything like that.
It wasn't that long ago when Americans were worried about the Japanese buying all sorts of different businesses, and there's definitely a cultural difference in how the Americans run a business or the Canadians run a business compared to how the Chinese do it. Is this one of the major risks associated in terms of keeping the business sustainable and on a growth track?
There is a little bit of that. There is this cultural differences. There is sometimes, I think, a little bit of a misunderstanding between the two parties involved. But in general, actually, I think the more of these acquisitions take place, the better the business relations between the two nations. They tend to improve. Actually, that tends to be a good sign. So they have to work out the deals. They have to work out their differences and things like that. But generally, it's better for both. It's a win-win situation if it goes through.
Thank you for coming in, Carlos Ramirez, professor at George Mason University.
Thank you very much.
Thank you very much.